Welcome. My name is Eddie, and I am here producing a video for folks with an interest in becoming better at the skill and art of stocks and stock option analysis. The purpose of the video is not merely to discuss the benefits and discipline which is required to participate in the markets, rather to describe how my personal journey analyzing stocks and individual industries has benefited me because it has taught me how to observe patiently over the years all that is involved in influences on your stocks and investment choices. Because I never ventured in professionally, I took it upon myself to observe and learn from such items as newsletters, podcasts, and resources. So even though I have an undergraduate degree, including calculus 2, 3, economics, and graduate level economics and public finance, my main source of information comes from understanding the basics, not diving into stocks and bonds because I was interested in getting rich. There are many people who will be watching videos like this because they already have great qualifications and careers or the means to sustain oneself and consider how learning about the markets could, in fact, produce additional investment income beyond saving, beyond 401k asset allocation, and speculation. You may find it ridiculous, like me, that there are folks who believe that if they dedicate themselves 100% to the art of making money in stocks, that they can achieve all of the results that they desire without learning or with an extreme amount of luck and determination. My preference is to share information with folks who understand the value of money and hard work and what setting aside $500 to $1,000 per month, per 2 months, or per quarter can do to improve your chances of making more in the long run. Trading less, observing patiently more, and understanding how one feels before making a trade and understanding the intuition that is involved. Why am I doing this? I am doing this because you may find that this intuition can propel you to learn how the various skills you already own can be used in your favor as well as or better than a professional who may not have the freedom to analyze the art of stocks the way people like you or I do. People who might have leisure time to go to the gym 2 to 3 hours a week, go to the movies 2 to 3 hours a week or more. In other words, if you were raised like me by a soccer mom and a baseball dad, you already know the value of time. You already understand that in order to successfully get through the pay period, you actually need some time for you. This me time is important. This me time involves 4 to 5 hours of television watching on the weekends. You might call it sports binging. It involves 2 to 3 hours a day of doing things that you might otherwise find, how shall I say, cumbersome. Whether it is walking the dog, spending time upkeeping your personal home, doing laundry, cleaning. The fact is, we have a way of better managing our time, which produces in less anxious moments. In other words, fear is a real emotion, and that fear that we have of losing things, of perhaps not keeping up, of not meeting goals, ultimately is more than just frustration. It is something ultimately that we choose to evolve from. If you're the typical male like myself who has some exposure to college, the gym, single life, married life, you do understand that over time, your efficiency and productivity can increase. And much like the vicissitudes of life and the vicissitudes of the stock market can ebb and flow. I may be productive on a Monday and less productive the following Monday. What it were the case that we could increase productivity over time indefinitely, but things like stress, commitments, romance, church, foibles, free time, pastimes, etc., can help us recharge, maintain productivity. But unless we are sure we know that we are comfortable with our income of $125,000 or more, we'll say, we cannot 100% say that we are as comfortable as our neighbors who are making that. I take my time, my money seriously. I am not a fast talker, and the purpose of this introductory video is to teach you to be wary of such complications as wanting to be that guy, that gal who's in touch with making tons and tons of money quickly, easily, or simply because they have what it takes. For the next 5 minutes, I'm going to discuss how I have become involved in stocks and bonds. I think it is important to understand the challenges that one may repress or ignore as it pertains to this subject of stocks and bonds. So let me begin with the principles that I don't believe I understood and attempted to work with before realizing that there is as much art as there is expertise. When I started thinking about stocks and bonds, I attempted to complicate things, mainly because I think along certain complicated lines. How will inflation affect the stock market over time? And how will it affect such things as the cost of living, the supply chain? While these are interesting economic principles, what they really are reflective of is the art, not the science. So a comprehensive analysis of stocks and bonds for someone like me was made more difficult by this complicated perspective. I can't remember how confusing stocks and bonds was for me 5 years ago. However, I decided in my free time to learn from others and even from related careers what it means to be involved in the stock market. For me, the decision to get a life and health insurance license gave me a little bit of perspective. The perspective that they taught was quite simple. People who don't use their credit and are hung up about keeping their balances zero are also very risk averse. And the chances of learning about financial management in a desirable way are alien to such people. In other words, investing anything, whether it's time or money or love or sacrifice, which I consider an investment, are things that are counterintuitive at times, wasteful at times, but part of our life. You have to admit that you're going to waste between 5 and 10 minutes or 5 and 10 hours a day. Not because you want to, but because that's your human nature, not because you're good or bad. The fact remains, I learned from my experience that life insurance sometimes requires a certain level of agility with understanding the stock market. In other words, there are certain brokered products that life insurance is tied to. In other words, when I put my money in a specific type of life insurance, I'm pooling it into a larger sum of money, which is there for the purpose of supporting contracts, which must be managed, which must be invested sometimes. I may need to borrow from my life insurance savings account at some point. The point is, everybody is trying in one way, shape, or form to make money easily. After getting that license and learning that I needed a series, 8 license because some of the life insurance products required the license, I realized I was becoming exposed to the idea of risk, of sacrifice, of allocating some of my money into a pool of money where such things as death and risk might impact the return on my investment, right? Um, as we speak, while we're not in a time of war per se, we are in a time of uncertainty. That uncertainty makes us think more, not less, about managing and investing. I have taken courses on real estate and real estate investment. At the end of the day, I have worked for companies that are publicly and privately owned. There's a benefit to each, but the point is that stocks, bonds, are means of owning something beyond what you can physically use every day. To make a complex study more simple, I believe it is important for me to share with you an analysis of what an introductory stock and bond analyst wants to understand. A, everybody's doing it. I'm smart enough. Do I know enough? Owning a piece of land may seem similar to stocks and bonds, but it is important to understand why. If I buy a piece of property, we'll call it an acre of land. There's the chance that over time, that piece of property will increase in demand simply because somebody decided to improve the land that was near mine. As a consequence, my property value went up a little bit above what I had expected. If I'm unfortunate and somebody bought a piece of land near mine, which wasn't maintained properly, and perhaps through its own use of industry polluted my land, made my land less desirable, the value of that land decreased. In a nutshell, that is what stocks and bonds ownership is all about. If I had sold half of my property the year before a benefactor or a really good neighbor had purchased the land beside me, my share in the land went down. And while the property value may have gone up 3 times what it was worth when I bought it, I am now looking at the fact that my partner who bought it a week or two ago now doubled or tripled his investment simply because I ran out of patience. I did not think that this land was going to be worth much. That sort of analysis is apropos to maybe the second year of investing, where beyond understanding the opportunity of becoming involved in high value assets with growth potential at the moment they are accelerating in value, we are beginning to understand why it's silly not to consider owning some land. The next 5 minutes of your time that is valuable, I wish to use to describe and dispel the idea of stocks and bonds trading. Professional traders. Professional traders are professionals because they have mentors, they have rules and regulations, and money to analyze, which is not their own. For instance, a well-developed piece of property, such as a resort, a golf club, a shopping mall, is more expensive than a piece of land. And if I, as a stockbroker, may sell shares of that golf club, that shopping mall, I am selling stability. My piece of land may go up or down in value with a certain level of tolerable risk that over time is more likely going to result in my selling half of it beneath what I paid for because of uncertainty and emotion than if I had invested some money in that golf course or shopping center. In other words, my vain belief that I can make as much money as a golf course or a shopping center is quite literally a risk, is quite literally a lottery gamble. I am not quite rich enough to afford many mistakes. So I believe that investing my money in a shopping center stock or a piece of ownership in a golf club may, over time, be incrementally better than investing in a bare piece of land, which is what stockbrokers or independent day traders and swing traders unavoidably, even if imperceptibly, do. In other words, the purpose of this discussion is it is not likely that you will get rich by investing in the land or investing in the golf club. What you are doing is you're protecting your wealth by investing in an established investment or piece of property like the golf club or shopping cart. Less likely to invest your life savings in a bunch of plots of land because you think you've arrived, because you have $5,000 to $10,000 or $15,000. The idea that you can make money quickly is a gross misrepresentation of stocks and bonds. In other words, what you want to understand is if your needs and desires and passions and time allow, it is possible that independently studying stocks and bonds with an intermediate worth somewhere between zero and huge can benefit. So your stockbroker, your professional who works for Merrill Lynch, JP Morgan, Chase Manhattan, or even your credit union is interested in results over time so that the wealth of a family who has $2,000 to $3,000 to invest per year, not per month, per year, is safe at the end of 5 or 10 years to help pay down a home, an insurance bill, college education. In other words, the stockbrokers that work for your large investment firm, whether it's Merrill Lynch, JP Morgan, Chase Manhattan, or your credit union, are interested in investing money as a savings account with interest perhaps accruing as much as a good savings account did in the old days, 5 or 6% per year, which through compounding mathematically encourages people to invest between $1,000 or $2,000 or more per year, with the idea that if Joe is able to do that over time, his investment is secure, but because it compounds, he makes more money in the long run. Not everybody has the ability to guarantee themselves investment income for 5, 10, 15 years or longer. These people tend to be folks that already had some wealth, had a business that they inherited or bought, and thus need to protect a portion of their savings or income. In other words, a professional stockbroker tends to work with folks that have greater means than the average person, perhaps the top 10 or 15%. Our goal is to do better than the conservative stockbroker who is trying to avoid loss, moving money from a rich company to a mutual fund to some allocation of bonds, treasury bills, the like. As long as there's reasonable growth over time, that broker can call themselves a stockbroker simply because they are following certain assets that are low risk investments. The examples I gave you are very obvious. There are stocks that are not going away, won't necessarily decline in value drastically over time. Rather, are companies that are wealthy enough and have enough recourses and Harvard grads working for them, or doctors or lawyers, that they will be able to continuously make a baseline amount of money. And like everybody else, invest their own money. As a consequence, becoming a wise investor requires a lot of success, a lot of tools under your belt, and the willingness to give the stockbroker a huge commission simply because they are protecting wealth. You and I want to make money in the stock market, and we want to be the same way. We do not want to throw away money unnecessarily. But we don't want to put all our money in a piece of Bitcoin or Amazon or whatever your favorite high trend stock is. when you begin investing in the stock market, you want to understand that you need to study the market in order to make money. If you're able to understand the times of the year or the month when investing in a stock poised for growth can give you returns, then you will more than likely make profits in the short run and effectively make more money by limiting your investment and limiting your investment to your own analysis and not the piggy bank of an expensive broker who will make you some money over many years, many years, if you have sufficient time and money to feed them. After having earned my license, and after having continuously been able to patch together a career as a cost accountant for such companies as a metallic fabricator, such companies as a government contractor, I realized that patiently observing the markets was both stressful and productive. I knew my friend had made money in Facebook, a guy that I had gone to high school with, and I was envious. I knew he made money in Bitcoin, and I was envious. Some might call it greed. Some might call it envy. Some might call it luck. However, my interest in being successful is what drove me. I did not feel defeated because I did not participate in Amazon or Facebook. I was content hearing about it and ultimately thinking about it and investing. Perhaps you are the same way. A few years after learning about, insurance, sales on the side, and periodic literature reviews, I stumbled upon information I paid for to learn about investing in medical marijuana. I don't recommend that. I don't recommend that because perhaps that level of financial commitment, that understanding, that guilt, that level of risk is perhaps a little more than what is tolerable for mainstream Americans. I will gladly discuss in a future podcast how to begin focusing on that market and how I did it and learning about it and how to eventually invest it in much the same way I would invest in Mercedes-Benz, in a golf club, or some other asset that is stable. In other words, it's a speculative market like the gold rush was a century ago. However, my patience and my willingness to listen to people on TV and radio and talk exuberantly about the stock market and their investments as millionaires ultimately led to my belief that I too had the possibility of earning a lot of money in the stock market. In other words, I can imagine a good golf swing, which I presently nearly have. That's why I got there. I can imagine myself doing that, but I did not ignore that. I did not ignore the fact that I was not there. I did not ignore the fact that I could visualize myself there. And those are the two takeaways that you must begin to appreciate. If you cannot visualize yourself with a good golf swing today, go watch a professional play golf, invest in it. If you do not know what it's like to appear like a professional stockbroker, I would advise that you spend some time over the next couple of weeks just observing. Those two things are a prerequisite to learning more strategies that will resolve to you feeling more comfortable with beginning a side hustle, a part-time or full-time job in financial analysis. I don't want to talk more than what you would consider excessive, but I understand some of you are more patient than others. I'm going to attempt to limit this introduction to stocks and bonds and trading to another 15 to 20 minutes. But for the most part, I'm going to accelerate and I'm going to dip my toes. I'm going to dip my toes, as it were, into concepts that can make you more confident in trading and understanding the art and some of the techniques behind it. I will pause this for a moment to get a cheat sheet. Thank you for your patience. I am trying to establish in you the confidence and the step-by-step process that is required to carefully and confidently make decisions in investing and to do it in a group setting that is supportive, that can help you set goals, much like a syllabus or a professor would during the course of a college course. Yes, it could take us 9 weeks to get started, or 18 weeks to feel comfortable investing $200 to $300 a week in the stock market. My goal is to show you that in the first 9 weeks, accumulating an investment fund can be doubled, first of all, without spending a penny. More importantly, can become something that you grow independently of the stock market and then start learning how to treasure your savings before investing wisely. So this is an educational discussion. I will call it a free introduction to trading. I will go over what I perceive and you should understand are free tools. And these are tools that are available to commercial stockbrokers, individual investors, conservative. What a stockbroker trainee should absorb in an easy to learn fashion. You may call it, even after 45 minutes of watching this channel, a quick start to trading. I want you to learn some terms. Become familiar with these terms during the next 9 weeks. In no rush, I'm going to spit them out, or iterate them, excuse me. Straddle, covered call, short, long, naked calls, timing, manipulating views and charts, recognia, Bank of America, Merrill Edge, recognia, Bank of America, Merrill Edge. Tricks, tools, news feeds, free alerts, candlestick and analysis, common sense or basic statistical analyses including regression, instruction, evaluation, EPS, summarizing, earnings, markets, ETFs, beginning, intermediate, options, levels 1, 2, and 3, guest speakers, and examples. This is an introduction for you to properly frame the context of learning investing in 9 weeks. The goal being, over the next 9 weeks, if you're comfortable, you will be able to more comfortably invest $200 to $300 a month, $200 to $300 per pay period, or $200 to $300 a week, which is effectively where your basic trader should be. You should not be on this channel if you cannot invest $200 to $300 a week in stocks and bonds at the end of 9 weeks, because this is serious. It is how I perceive a reasonably intelligent, dedicated, and passionate person should be able to do and proceed to make money. In the next 5 minutes, I'm going to go over some of the proof, some of the pudding, some of the taste of some of my successful trades. They won't necessarily reflect trades that I was able to make 1 or 2 years ago. But part of the reason you should be here is so that you can get from where I was 2 years ago to where I am today. 2 years. Maybe an associate's degree's worth of time in the stock market. So if you had time to pause your life, dedicate yourself to educating yourself while getting paid what you're getting paid today, or imagine getting paid $30 an hour for the next 2 years to study this, you getting paid for 2 years, $30 an hour, you would possibly do and possibly not do because of the obvious. You may have a strong penchant for continuing to do what you're doing because you think you're going to break through, or you like what you do. In fact, you may love it. But over time, it may be financially worthwhile to consider what it would be like if you had done that 2 or 3 years ago, and today were speaking to me, could have a conversation with me on where I think I should invest $200 or $300 this week. One of my very first successes in the stock market came from investing in a stock I knew nothing about. I got lucky. I subscribed to the right investing newsletter, to the right blog, to stumble upon a stock, which was a penny stock, that made some money even though it failed in the long run. I know you and I will not make a living looking for some kind of special stock that's going to blow the lid off and go from $1 to 1,000 overnight. It's just rare, not going to happen. It's publicized. Amazon and Facebook didn't get there overnight. They certainly didn't. But if you're in the right, how shall I say, learning mode, appreciation of advertisement, literature, and are receiving it, you may over time be able to learn how to have greater access and knowledge on that potential. So I am simply saying, beginning your understanding of the stock market includes understanding part of you is looking for easy money and a quick fix. And you may be lucky. You may be lucky. Last week, I was sitting by my computer doing regular work, and I had a news bulletin. The following stock was perceived as artificially inflated at over 100 earnings. What is it? The ratio of earnings per share. Hyperinflated by what you would call a rating service. So stocks like bonds and banks are rated. Fitch, whatever industry model there is to rate, they come out with certain rankings. The ratings dropped the stock from approximately $40 in value to 30 or below. I didn't get in at 40 and out at 30. I got in somewhere in the middle for a profit, a reasonable profit. We'll call it 200%. Okay? Quick money. In previous weeks, I was happy to make between 10 or 20% on the trade. I didn't feel happy that making 10 or 20% on a trade was a good idea a few months or a few years ago. But because of my exposure to literature and analysts, I've learned that professional traders target a max of between 10 and 20% on a trade should it grow exponentially. And instead of gradually making that money in a few days or weeks, it actually makes 3 or 4 times that. It is because some advertisement, some news bulletin, some speculative investor thought that it would continue to grow exponentially even above a reality, shall you say, of valuation that helps you. In other words, you should be aware that your goals are small. Your goals are to bring in $500 or $600 into the stock market at least per month, with the expectation of making between 5 and 20% per month consistently. Again, compounding interest over months is much better than over years. And the purpose, again, of this discussion is to frame the context on what you're doing, when you're doing it, and how you're doing it. Sitting there, just being aware of the news helped me make money last week. A few months ago, while working at my metallic fabricator as an estimator and project manager, whatever, I heard that OPEC was going to be meeting to cut the output of oil. Okay. And I decided that reducing the supply of the oil would inevitably lead to higher prices and some resolving incremental increase in oil. That is having no technical analysis, rather information and very fundamental knowledge of economics. So investing in oil, investing in news-related items is something that you can do as you establish some confidence, but maybe not something you can do today or tomorrow. Over the next 9 weeks, I want to talk to you about all the literature and blogs that I've used, including those marijuana literature pieces, including those blogs, including those other persons on YouTube who've helped me to learn, who may not be as smart as me, who may have been more lucky than me, less lucky than me, but dedicated, dedicated. I think you'll enjoy this journey. I think you'll thank me. I think you'll appreciate the investment of 9 weeks of your time in simply and patiently learning. I am not a licensed financial advisor. I don't pretend to give financial advice. I can talk about literature, my knowledge, education, and I am not making recommendations. I'm not interested in helping you make money. I'm interested in talking about the stock market with like-minded groups so that we can all feel more comfortable sharing our experiences, understanding our choices, which may lead to greater confidence in future trading. I may point out individual stocks by name in retrospect as an analysis. I will not make predictions on their performance in the future. I will analyze the stocks that I choose to talk about simply because they were news, and I may give it a thumbs up to agree with an analyst or a thumbs down. I am not asking you to do anything. I am not a licensed professional, nor do I intend to give you financial advice. This is a learning forum where I bring my thoughts and education to the table. If you feel that over time you wish to discuss stocks and bonds in public, become more comfortable talking about it at work, and perhaps making independent decisions, and this educational weekly podcast is helpful, I may ask you to subscribe to more frequent subscriptions. I will have a bi-weekly channel for $1 a week. I may have a daily channel for in the future for $2 more a week, for $3 a week. I am doing this because it helps me share my ideas and become a more serious investor. I thank you for your time. I hope you understand that hitting the like button and staying tuned for next week's video could benefit you. I'd greatly appreciate you hitting the like button. I will summarize this video and give you a sneak peek into next week's lesson in the next 5 minutes. We have covered many terms in the past hour. The terms used are important because they characterize the fundamentals behind stock markets. We covered stocks as a vehicle to own a asset that may go up in value and unfortunately go down in value. While there are many commonly held beliefs about when to time the market, they aren't reserved for experts, professionals that have been doing that for years. If you're not a professional, you need to understand that investing is risky. It's not for everybody all the time, and it certainly should be understood and studied to improve your chances of not losing very much money. The first term that I will go over is the candlestick. The candlestick has two characteristics, the candle and the wick or the flame that is above it. The candlestick decreases over time, doesn't it? It is a bar of wax that decreases over time. It goes down, right? At which case you light another one, and the candlestick is perceived as small and large. That is the reality of the stock market over time. The value of the real estate at the golf club and the mall can go up and down depending on such factors as the weather, tourism, jobless claims, etc. The property may go up and down between 5 or 10% per month. It may remain steady. It may remain within a 2 or 3% variation. Thus, the size of your candle is always reflective of normal and abnormal times. During abnormal times, the likelihood of your candle, which is already pretty big, getting even bigger, growing in value, is probably not going to happen because owners of that land or property have decided the candle has gotten huge and it's time to sell. With the decreasing ownership of the stock, the demand has slipped and the price will go down. Candlesticks are a good analogy of this. I used the monthly and quarterly candles as an example because I want to understand the, how shall I say, magnitude of the changes in value of a stock over time and understand that even though it will get choppy, it is still incrementally gaining in value. And should I understand that after the sellers have contracted, there's a likelihood that the opposite will happen, that people will become interested if the stock's value is perceived as to be a little low. I will stop talking about the candlesticks now and say thank you for watching. I use Bank of America, Merrill Edge, and the recognia tool to help me understand the candles across dozens of stocks and dozens of industries, including stocks, exchange traded funds and SPACs, and options. In this week, I am particularly focused on understanding which industry is more than likely to do better than others over the next 5 trading days. And at the end of the week, I'm going to publish a video showing you my decisions based on this knowledge. Peace out.